Hey, good morning, everyone. Joe here again. So I wanted to make a quick video to walk through a trade I took yesterday morning uh, on the S&P 500 or the E-mini futures. Um, so yesterday ended up being a large range bullish day, and I was able to secure an entry yesterday morning around basically around 10 o'clock. So after the market had opened and everything, I was able to get an entry. And again, this was using, um, the ICT YouTube mentorship model using the fair value gaps. So I wanted to, kind of make a video walking through this, kind of the logic of why I was expecting it to do that. How I entered, where I got out, what targets I was looking for, all that kind of stuff. So we're going to go ahead and start off on the, we'll start down here at the 15-minute, essentially, and we'll just work our way down. So zooming in on yesterday's price action, you see in the morning session we were kind of consolidating overnight on Monday. London open, ran up, took the buy side, ran down, took the sell side, and started climbing up. We poked above this weekly open gap. That's what this orange box is here. We're still below the weekly open, which to me is kind of pointing to that it could be a bullish week. We're kind of, Monday could be the low of the week, kind of thing. So I was kind of going into yesterday expecting bullish prices. We had on Monday we had a drop down. We've been climbing. So I was really looking for, at the very least, Monday's high to be challenged at 39.0950. So we peaked above the weekly open gap, and then started retracing back off of it at 8:30 or around the 8:30 New York kill zone open. You see we kind of dropped down below these lows and then rallied higher. And I believe on ICT's Twitter feed, he was actually calling attention to this area right here and this fair value gap. I'll actually mark this. I believe this was the gap he was calling people's attention to, and claimed that to be an entry, which for me, I was watching that as well, but I was expecting price to come down below 39.50 or 38.53, sorry, to come into a discount. So I was looking at, coming in and pressing into this bullish order block, these two down closed candles here, or maybe into here. And keep in mind this is on the 15-minute time frame. So if you go down to the 5 or the 3, 2, 1, the lower time frames, there's plenty of gaps in here in this discount. But clearly price didn't make it down, so there would have been no entry for me down here. And like I said, ICT, based on what he said, it was enough for it to go down below these lows. That's a discount, so you could have entered here on this fair value gap because it did break above this high. So this would have been valid, in ICT's eyes. For me, I would have been a little uncomfortable expecting that to hold when it's technically above equilibrium for that leg up. So I did not enter there, obviously. So I'm going to go ahead and delete that. So I was watching, I watched it rally back above the the weekly open gap, above the weekly open. So we were above New York midnight open, above the 8:30 market open. So I was pretty confident that we were going bullish for the day. So after the 9:30 market open, we just kind of kept climbing. So you'll see, so I was stalking, looking for a bullish entry. So we'll go down to the 5-minute just to show you in a bit more detail what's going on here in that section of price action. So again, this red line here is Monday's high, the 9:30 market open. So you see we rallied above the weekly open gap, came back down, tested it as support, came up to the weekly open price, came down again. But now here's what's to note, and this will be clearer on the 1-minute. We came up, we poked down this swing low right here, went back down below the weekly open gap just barely, and went below, most importantly, went below this swing low. So we broke to the sell side, we ran up, broke a high, and retraced back down into what? A fair value gap. So this is where I was like, okay, I'm interested right there. So I was looking to get in, and as you see, the high of this candle, this bullish one right here is 38.7625. My entry was 38.7675. So if you were just basing an entry off of the 5-minute and you were trying to get the lowest point, you wouldn't have triggered unless you adjusted up a little higher. But I didn't enter off of the 5-minute. The 5-minute just kind of framed and confirmed my idea. And you'll see as we keep going lower, you'll see where I actually entered based on the 30-second time frame on this. But you'll see in a lot more clarity like what actually took place. So the 1-minute is really where I was like, okay, I'm gonna hunt, and this actually led me to go down to the 30-second because I wasn't seeing what I wanted on the 1-minute. So again, here's that weekly open gap, this orange shaded box. You see price went above it, kind of consolidated a little bit, set some highs and lows. It dropped down, just barely poked below all of that range it made, and then ran higher, and then came back lower into the range. So I was eyeing, these two bullish candles right here where it broke up. That was the bullish impulse move I was watching. So that's where, somewhere in there, I wanted a fair value gap. And there was a small one between this candle at 9.56 and this candle at 9.58. There was technically a gap there, but it was like maybe a point, and I wanted something with a bit more definition. So drop down to the 30-second, and you'll see exactly where I entered. So now, looking at the same bit of price action, the weekly open gap, here's where we poked below it, here's that impulse move higher above the consolidation, and then here's the bearish impulse move back down. But now, look how much more clear that gap is. So I entered, to get the points of the fair value gap, you take the high of the first candle, low of the third candle, and I entered on the high of the first candle, which is, the bottom point of the gap, which, comes in at 38.7675, which was my entry. Stops, I had actually put here below this swing low, which was at 38.6975. So now you would say, well, why didn't you put the stop down here? And in reality, the safe entry would be to put it down here. But my logic was that we had made this range, we came up, we broke this low here, and then we took this low and all of this over here. We took all of that on this move down right here before we rallied away. So I viewed this swing low here at 946, 947-ish as the smart money's protected position. They weren't going to let it come back down here. So I felt that this low here, if it broke this, it was going to break this anyways. Um, so I felt, okay putting the risk of putting my stop loss there. Um, so then you'll see, so that's the entry based on the 30-second. The fair value gap, it came down, hit it pretty much right to the point. There was literally, the low was 38.7650, which would equate to one tick of drawdown. And I almost missed it, to be honest. I was actually setting the limit just as it was coming down here, and you see I caught it on this green candle. So I caught it on the wick back down into it before it took off. So I almost missed it, but luckily I didn't. So, and it's worth noting, this is on TradingView, my paper trading account. You can see I bought 2 contracts at 38.7675. So this is an actual execution, not just putting a long position on. And so I took my first partial here at 38.9625. Again, even though I was really confident it was going to Monday's high, I took half the position off at 3R, because I'm trying to work on building up the habit of paying myself and not demanding the full move before I take any profit. And obviously you can see based on the long position I have marked, it goes well beyond Monday's high, because I was using that to kind of mark what my overall terminus for the position would be, like where I was really expecting price to go, but not necessarily where I would hold it to. So I took my first partial at 38.9625, which equates to 3R, because 3R is pretty solid. And then I took the remainder of the position off at Monday's high at 39.0950. See, it kind of played around in there for a little bit. I took it off there. I was originally going to keep holding it, and I was like, no, you know what? That's your objective you were looking for. It's based off of the 30-second. There's nothing saying that I was telling myself there's nothing promising that I caught the move that would run, daily or weekly highs from the 30-second time frame. Even though that's what ended up happening, you can't count on that. You can't be consistent expecting that kind of result. So basically, you can see here, looking at the middle chart here on the bottom, the 5-minute, caught a perfect entry. It immediately, before the lunch, ran up, smacked Monday's high. I was out of the position by 11:15. So in an hour, I was fully out of the position, had closed everything out. So then the rest of the day, I was just kind of watching it to see if it would go to my targets. And as you can see, it went to my full target, which would have been a 10.46R trade. And you might ask, like, okay, well, what were you targeting? Like, where did you get that 39.50 number? Other than it just being 39.50 is a big, quarter point whole number. It's kind of logical that it could go there. But what you can really see is if you look at the top middle chart here, the 4-hour, this previous week high here from July 8th came in at 39.22. So this is Monday's high here. This is my second objective, was 39.22. As you can see, it reached that in the afternoon yesterday. 39.22 is right here, so it ran up into that. After the lunch hour, you can see it kind of went up, dropped down, and continued running up. And then my final terminus objective was 39.50, which, if you look over here from the end of June, we had these relative equal highs here. We had a high created, it dropped down, it took that high, and then made this big sell-off here, which was kind of this like equal lows and stuff I had mentioned before. So it was pretty likely that these clean highs were going to get swept. So I didn't fully anticipate that it would have done that whole move yesterday, which again is why I talked myself into taking partials and closing the position at Monday's high rather than holding for longer term objectives. But it did end up running that entire target in one day. As you can see, it actually didn't hit it until the Asian trading opened. So at about 8 o'clock Eastern time, it ran up and hit that and kept going. And then now it's kind of like retraced off and, had some pretty crazy price action this morning now, reaching back up into that. So, we'll see what today brings. But yeah, so that was the trade breakdown yesterday. I made a modest like 3R or something off of that, nothing too crazy. Could have held for way more, but trying to set reasonable objectives to close trades and take profit and make sure I'm paying myself along the way, especially as I'm still learning. Maybe somewhere down the road I would have the confidence to know that the trade was going to run up here, and in theory, I could have just kept moving my stop up at reasonable points, and could have caught that whole trade with no risk to myself. But it was still a win, and it was an even better feeling to see my analysis come out and be correct. So yeah, so that's what I've got. If you've got any questions, feel free to drop them in the comments. If you want to share any thoughts or anything about your own trading journey, whether it's through ICT's mentorship or not, or if you have any comments about these videos, I'm going to try to get back to doing these videos a bit more regularly. So yeah, and then also I have a link in the description of this video to a Telegram channel that I set up where I will try to post more frequent updates and charts and just kind of thoughts. Since I don't have a big enough base on here to use the community tab on here, I'm going to do that through Telegram. So if you're interested in doing that, go jump over there and join my Telegram just to kind of keep a bit more up to date, just in case I don't release videos as often as I want to. But until I talk to you again, good luck and happy trading. Thanks.